Welcome back to the channel. In today's video, we're going to go through a quick weekly market forecast. I'll break down key levels, potential setups, and what to keep an eye on for the week ahead. Whether you're a beginner or experienced trader, this forecast will help guide your trading decisions. Let's get started. Alright, so let's jump into the charts. And right now, we're looking at gold on the 4-hour time frame. From a higher time frame perspective, it's pretty clear that gold has been in a strong bullish trend. The market has been printing higher highs and higher lows, so overall momentum is still pushing to the upside. Now, if you remember from my previous breakdown, I was anticipating price to give us a third touch on this trend line right here. It would have been a nice clean bounce for an entry, but as we can see, price didn't respect that zone. Instead, it just continued pushing higher without the retest we expected. This is a good reminder that the market doesn't always give us perfect textbook setups. But we don't chase, we observe and adjust. And the bigger picture hasn't changed. We're still aiming for this top zone here, which is a major area of interest based on structure and previous price action. Let's move over to the 1-hour time frame to zoom in a bit. On the 1-hour chart, we've got this previous resistance zone up here, and price has now broken above that level. This was acting as a strong ceiling for a while, but now it's been breached, and that tells us buyers are still in control. What we're watching for now is a possible pullback. If price pulls back into that broken resistance zone and holds as new support, we could look for continuation entries to the upside. Ideally, we want to see some kind of confirmation, maybe bullish candlestick patterns or a bounce off the zone, to give us a more confident entry. Also, if we look to the left, we can spot a previous rejection area. Now, price might react to this level again, but it's not the main focus. It's more of a minor obstacle, something to keep in mind, but not something that changes our overall bullish bias. So, that's our first scenario, a clean breakout, followed by a healthy pullback, and then a potential continuation toward the upper target zone. Now let's consider the second possible scenario. If we connect the recent highs using a trend line, and then clone that line to form a parallel trend line below, we get a rough ascending channel. If price starts to move aggressively to the downside and breaks below that lower trend line, that would be our first signal that bullish momentum is weakening, at least temporarily. In that case, we'll shift our focus to short-term selling opportunities. We're not talking about flipping our entire bias here. Long-term, we're still bullish, but there's room to catch a short-term correction, especially if price forms lower highs and starts to respect that bearish structure. We'll be watching for bearish confirmation, maybe a break and retest of that lower trend line or rejection from a key level. In short, we're ready for both outcomes. If price holds the breakout and pulls back cleanly, we're buying. If it breaks the channel to the downside, we're looking for quick sells before the next leg up begins. Either way, the goal here is to stay reactive, not predictive. We let price show us what it wants to do, and we position ourselves accordingly. So to recap, bullish continuation is still on the table, with our main target being this upper zone. But we've got a backup plan if momentum shifts and gives us that short-term downside opportunity. Let me know in the comments how you're planning to approach gold this week. Are you bullish, bearish, or just staying patient? Alright, that's it for the gold breakdown. Let's move on to the next chart. And in our next breakdown, we're shifting focus to Bitcoin. Let's start by clearing everything off the chart and working with a clean slate. We always want a fresh view before we dive into the technicals. Now, the first thing I notice here is that price has been moving in a clear uptrend. We've got a strong impulsive move up, followed by a correction, and then another impulsive leg, showing us consistent bullish momentum. Up here, we've got this significant high. And what stands out is how price came up and took out that high. This kind of move is often referred to as a liquidity grab. It's where price spikes above a major level, triggering stop losses and inducing breakout buyers, only to reverse shortly after. Now, according to my strategy, Whenever I see a liquidity grab at the top of a bullish move like this, I start preparing for possible selling opportunities. It doesn't mean we blindly sell, it means we start building a case for a reversal. Let's now drop down to the 4-hour time frame to refine this setup and see exactly what price is doing. On the 4-hour chart, we can clearly see this strong upward movement that led to the liquidity grab. Now, if we look closely, we've got a possible trend line forming here. Price touched this trend line at the bottom, then almost touched it again, and now we've got a third touch right up here near the top. This third touch, especially after a liquidity grab, is significant. It adds confluence to the idea that the market might be preparing for a downward correction or even a short-term reversal. Based on my strategy and the structure I'm seeing, I'd be confident enough to start looking for sell setups from this zone. If the market gives me confirmation, like a bearish engulfing, a break of structure, or a clean entry pattern, I'd take the trade. I trust my system, and this setup aligns well with the rules I follow. Just to recap, we started with a strong uptrend. We saw a key high taken out, likely a liquidity grab. And now we've got a third touch at the top of a trend line. All signs are pointing to a potential shift in momentum. So I'll be looking for bearish confirmation before pulling the trigger on any entry. As always, risk management is key. Just because a setup looks good doesn't mean we go in heavy. We play it smart and protect the account. Alright traders, that's a wrap for this week's market forecast. We took a solid look at both gold and Bitcoin, broke down key zones, and mapped out possible scenarios to keep you one step ahead. Now remember, the market doesn't owe us anything. Stay patient, trust your analysis, and let price come to you. If you enjoyed the breakdown or learned something new, make sure to like the video, drop a comment with your thoughts, and subscribe for more weekly setups and strategy breakdowns. And hey, whether you're buying, selling, or sitting on your hands, just remember, it's not about predicting, it's about reacting. Stay sharp, stay disciplined, and I'll catch you in the next video. Peace out.